Okay, guys, welcome back to my YouTube channel. It's the boy again, the Legend FS Academy. So in this video, without wasting much of your time, I want to be showing you on how you can be able to spot what we call market structure, not those complicated one you watch on YouTube. How you can be able to spot market structure. See, if you want to spot market structure, maybe market is in a downtrend or in a down uptrend, the preferred time to know this particular structure is on your daily chart or on your weekly chart. Although 1 hour 30 minutes may show you, but those market structure on 1 hour 30 minutes, they are not reliable. So for me to get my market structure accurately, I mostly use daily or weekly to get my market structure and to know where I'll be pressing buy and where I will be pressing sell, and to know when when the chart will be over, when the structure will be terminated, when the structure will be over. So without wasting much of our time, let's go. Let me show you how to identify the market structure with an example before we now head into the chart for real life example. So let's assume that we have a market that is coming downward like this, is coming downward, and got into a particular major support zone, which is somewhere about here, and market give us a reversal pattern here, which is the M pattern, and market start making it start another wave to the upside. It broke above the neckline, came back again, made another high, came back again. Within this process, sometimes a lot of traders intend to say, once the market have broken above this high, then the market will not come below this particular high, which is not good. Which is not good. In my own case, I have found that a lot of time, for example, when market broke above this particular high, most of the time market will always come back, because once market come back to this particular zone, a lot of traders intend to start buying. They intend to start buying. But to me, I have noticed that once market come to this particular zone here, sometimes market intend to break lower, to come and take the stop of the early buyer. And when market take the stop of the early buyer, that is when the market will now rally up again. So market will not come here. But what I don't want to see is the market to come below this particular previous low. I don't want market to come below here. But as long as market can comes back within this middle, I will be okay. Sometimes market may just pull back here and continue like this, and continue going higher, You see, in a clear example of a textbook, we will just see a market structure, a very niche structure that will just go straight away. It's not always like that in the real chart. They will just give you something like this. The market will just go like this, go like this, go like this, go like this. And when you finish watching this kind of market structure maybe you finish reading it on a textbook, or you finish hearing it on maybe you just watch it on someone's YouTube channel, and you hop into your chat to find similar case like this. Best believe is 90% of the time you will not see a neat and clear market structure, just like this particular one here, So you need to adopt how to know different markets, although they may still be the same thing, different kind of market structure. You need to adopt to it. And when is the structure still valid? That is what I'll be showing you in this video now. Let's say, okay, within this period now that this market move from here, the market move from here and pull back. It went up to break this particular high. It went up to break this particular high. I'm fine with that. The market came back here, break this particular low, this particular one lower, break it lower. I'm still fine. The structure is still very much intact. Like, unlike some people will tell you that once market broke this one, the market has shifted. That one is not a truth. Once the market break this particular low, I'm still fine as long as the market has not broken this particular level here. So the market can still come back again, pull up again, came back to somewhere here, because there must be a market manipulation. There must be a stop loss run. The market will not just move. If market just move straight the way everybody anticipates it, everybody will be a millionaire. So that is why market always play tricks to the early buyers or to the early sellers, which is when market break a particular structure somewhere here. Let's assume that market, okay, let me start again. This thing messed up there. Let's assume that the market just move up like this, comes down, then break this particular low, comes down again. So what a lot of people intend to do is that once this particular low has been taken, let's assume that market just came to this particular low here. A lot of people will want to start buying. Let's buy. Their stop loss will just be somewhere here, somewhere below, because when they say you buy at when you buy, you put your stop loss lower, they will just put their stop loss just below somewhere here. And for early buyers, for early traders who don't really know how stop loss work, stop loss run work, the market will just pull down to this particular zone here. Market will just pull down. Once the market has cleared your stop loss, once the market has cleared the stop loss, the market will start moving up again. So as long as the market is still maintaining structure, the market can still pull back to this particular resistance now and become support. I'm still okay, as long as it did not breach this particular zone here. If the market did not breach this particular zone, I'm fine. This one is not my problem, because I know that definitely markets must come and market must come below it to come and look for stop loss run. So this one shouldn't be a problem when you are looking for market structure. Don't say that my mentor say when the market has broken a particular zone, a particular resistance zone, once they come back, I should enter buy. So people will say they are buy limits there. I don't have problem, but what I'm saying is that always be very watchful for stop loss run, because once you say if market broke this particular low, this particular high, if market should come back here, market will definitely bounce up like this. Although sometimes it may likely happen that once market broke this particular low, this particular high, I mean to say, once market come back there, once market come back to this particular zone, so sometimes it may also respect it and bounce up from there, but 80% of the time is not always truth. Once market broke this particular high here, go up, coming back for it to become a retest, market will pull down to somewhere here, Once I spot this, once I spot this particular pulling down, I know that the stop loss one has been done. So what I'll be looking for is a candlestick confirmation to go long. So in the clear example, for you to just know when market structure is still intact, just keep on watching. As long as we did not breach this particular low here, once the market move up like this, it broke above this one, still came back. Now it came back to pull down here. As long as we've not breached this particular one here, once we breach this particular one here, market has the trend of the market has shifted. If you are holding on a buy trade, that is the time for you to start exiting. So market can also pull up like this again. Let me just give you a neat and clear example of what I'm saying, for you to actually know when the trend is still very much intact and when the trend has violated structure and wants to start heading down. So in a clear example of this now, let's say market is still moving, market is going this way, market is going up, came down, up, came down, up, came down again, move up again, came down again, came down again. As long as I'm seeing this kind of pattern, I'm still very much bullish on this particular pattern, and market keep on moving like this. I'm still very much bullish on this particular pattern. You can see that this is a normal chart. This is what you can easily see on your chart. Once market broke above this particular high, it came back, pull down, did a stop loss run, push up again, it came down. As long as each and every given time with this particular level, if we are still respecting this particular level, I'm still fine respecting this part. As the market broke above here, it came down, pull back, we respected this particular low here. This particular low here, we didn't break below it, I'm still fine. Market pull up, came back. If the market came back to this particular zone here, this particular zone, these are the particular zone. So once we broke above this particular level, I will wait for the market to pull in inside this zone. I don't buy I don't buy on the support or resistance zone. When I did those particular pattern is when I was still learning how to trade. Now I wait for the bounce of any support or resistance level. I don't want to be used for stop loss run. So once market broke above here, it came back, pull down, then pull up again. We are still in a clear bullish market. So what will make a trend or a structure be invalidated? What will you see on your chart that will make you to say that market has actually shifted? So let's assume that we're having this particular scenario. The market is moving up, clearly moving up, and for some reason, that's why I say if you want to do your analysis, please start from daily. No matter if you are a 15 minutes trader, 1 minute trader, whatever time frame you use for your entry, please, I beg you, always start from daily or weekly. Those are the time that will show you where major support and resistance is. Let's assume that on this particular trade, on this particular example now, we have a clear resistance zone somewhere, here, and you have been on this trade you have been longing this trade, maybe probably somewhere from here. You've been longing, you've been making the whole pips, and you are happy. And for some reason, you are still going, and you spot this kind of pattern. Market pulled down here, came back here, came back to this previous high here. So what do you expect is market to come and take off this particular high here to go up, something like this? Market may just pull back to just come and make a new higher high. But that doesn't happen. Instead, market now came here, rejects. In this particular zone here, remember we are in our resistance zone here. The market starts consolidating here, consolidating, then consolidating. In this case like this, I will now my interest on this particular trade now will diminish, because now what I want to see is for market now to break above this level. But some reason the market has been giving me a equal high. I know that there's a problem. So in the way I trade, I will now map out this particular zone, and map out this particular zone. This is my key area where I will be looking out for. That. If market can clear here, we will know that we are clear. We are clear to the downside. And if market can still clear here, sometimes, in this market is what we are dealing with is probability. Sometimes market can just pull down here and blast up. So, but if market can clear here, if market can clear this particular zone, because market will play around here first, give us M pattern, that which is the reversal pattern, and market will just likely wants to pull down here. Clear. If market clear above here, I'm break and retest, I may want to enter. But if I'm not totally convinced that market has actually changed his direction, I will wait for this particular zone to be taken out. Once I see that this particular zone is taken out, and that gives me a clear M pattern, once any candlestick close below here, that is when I will consider that market has actually changed its structure. This is on a uptrend, similar to downtrend also. If you're on a downtrend, what we'll be looking at is for W pattern, something like this on a downtrend. So you should be looking for something like this on a downtrend. So market will always give you this. Don't worry, I will show you some of the trade which I took, and when I spotted this particular pattern, I hesitated, and some of the trade which I took, which I'm still currently on it. So once you spot this kind of pattern on the lower time frame, on the higher time frame, just know that market is about to change his way. So let's go to the chart of Euro JPY, so that I will show you what I have there. How you can be able to spot this kind of pattern, so that you can profit in the both in the bull and bear market, so that you will not be confused when you are seeing this kind of market structure on your chart. You will not know where to buy, when to sell. Maybe you have been told that once higher has been interceded, it is time for you to go long, or it's time for you to go short. Sometimes it will not likely be like that. So in this scenario now, look, on a daily time frame, we are having Euro JPY. What we can see from here clearly now is that the market has been in a massive uptrend. Look at where the market started from, somewhere here. Look at when the market started from, somewhere here. When the market began to give us an head and shoulder, inversor head and shoulder here, which is the first, the left shoulder and the right shoulder and the head. Once the market completed, look at what happened here. Look at what happened here. The market, look at what happened when the market broke out of the neckline here. When the market broke out of the neckline here, look at this is the neckline. This is the inversor head and shoulder. The left shoulder and the right shoulder. This is considered the head. So market broke out of it. Market broke out of it somewhere here. It came back down. So if you have this type that whenever market just came back to resistance support, maybe resistance that will turn to support, you intend to buy or intend to set your buy limit there. What happens if the market decide to dip down? So market actually dip down back, and which is what I always wait for. I always wait for the market to dip down to take off the stop of the early buyers. Then that is when I will not start buying. So once market broke up, it came back, deep down, take out the whole stop of the early buyer. People who bought early here, you take off their stop, and market pull up again, pull down. That is when market started making series of higher high and higher low. Look at how the market was just going. It made a higher high here. It broke down. It moved up. It came down. Look at market started moving from here. It moved down, came down here, move up again. But this one we still consider it because this is a higher time frame. It still came down, move up again, came down, move up again, came down. All this one, like I told you, I still consider all this kind of pattern now as a higher high and higher low, which means that we are still in a strong bullish market. The trend is still very much active. So can you see how the market was just moving? Look at, I traded this particular pair, Euro JPY, and I made some good amount of money from this particular trade in my proper account. And when I spotted this particular zone here, that was maybe last week or last 2 weeks, I spotted this particular zone. This is another way you can also do your analysis. I spotted this particular zone here, and I know that this market has been ranging within this particular zone. I waited for the breakout, and once the breakout happened, I waited for stop loss run, which it did here. The market now close. Well, after the stop loss run, the market closed and pull back again. This is when I hopped in, but I get out maybe somewhere here, thereabouts. Somewhere here is where I get that from, because I was not more comfortable with the trade again, because the market when it got somewhere, it began giving me some reaction, which I now hopped out. So now, look at how the market is moving. The market move up, move down. This is another structure here. If you are to map out your structure, this is another structure here. Look at when let me just pull up my structure zones so that you can be able to know what I'm saying. Let's just see, because I like trading from zone to zone. Let's just say this is my zone. I made my zone like this. I made my zone clear. I made my zone, but this is not the proper way to make zone. If I want to make my zone, I know what I will say before I will make my zone. So look at when market broke out. Market came back, pull back to the neckline of this particular zone here, which is normal. It broke above here again. Once it broke above here, it made up. So a lot of traders will want to say, you buy here, you buy somewhere here. No, buying somewhere here is risky. Always wait for a stop loss or which the market didn't. The market dipped down here, somewhere here. Look at when market broke from here. When market made up, it pulled back to here. Like what they will always say, that you should buy from somewhere here. No, the market is not always like that. The market pull back. It pull back. It break below here. A lot of people want to say, it's like trend have changed. Let me start selling because of this strong bearish push to the downside. But no, if you understand how market structure worked, you will not be trapped in all this particular scenario. So once the market pull down, it break above this particular recent high again. Once it broke above this particular recent high, the market still pull down below here, below the one it broke out from. See, look at it. See, market still pull down below it, and market eventually pull up again. And now where the market is going to, if you check out from our higher time frame, we could see maybe there is a major higher resistance zone which is up there, which I've checked for my monthly. So this is how you check your trade. So in this particular trade now, I'm still keeping eyes on Euro JPY. What I'm still watching for, if the market can pull down here, this is where I will be looking for my buying opportunity. For now, I have exited my position. I am no longer holding on to this position again until I see maybe some market structure like this. And if this did not happen, I will not be trading. I will let it go because I don't trade. I don't chase trade. I always wait for a perfect setup to comes to me before I will press buy or sell. So what I'll be waiting for is this market to come back to this particular here, pull down here, and head higher. So let me show you some of the trade I took within this week. Some of the trade I took within this week. I took okay. One of them is NZD. You can see on my okay. I've already deleted my analysis on this particular trade because this particular trade annoyed me. I was selling target here, but when the market got here, you say okay, thank God my this thing has come back again. Okay, for you to see my analysis on this particular trade now, my overall target was somewhere here when I was shorting. I shorted from the moment we broke out of this counter trend line, and market was just coming down. But market now got into this particular zone here and got trapped. Instead of market to keep on going down, market have refused to keep on making a lower low, lower high, lower low, lower high. Market now gave me a reaction of change of trend. So what I did was I exited my trade because I don't want to hold a trade and be saying I'm waiting for overall target. Why a trade is giving me a reaction to turn for trend to change. So this is one of the trade I took this week, and I exited. I've already exited on this trade. This is another trade I took. I took AUDHF. I'm currently on this particular trade now. Let's wait for my chart to load. I don't know what is wrong with my network. My network is a bit slow. Let's just wait for it to load. So this is what I'm seeing. For you to spot this particular pattern, remember when the market was coming down, I told you always wait for the W pattern or the M pattern on the higher time frame. Always wait for it on the higher time frame. This trade, I took this trade all the way from here. When this particular zone was taken out, this is where I took my first entry. Yesterday, when I wanted to sleep, I closed all my trade here. And this morning, when I woke up, I saw that there's still need for the market to come and test this particular zone. I enter again to ride the trend to this particular zone here. So what I did was, for me to get this particular trade right, I know that from our monthly time frame, the market has given us what we call, I analyze this and I show this on the weekly time frame. The market has given us what we call the triple bottom. So the market has given us triple bottom. So you can see what I'm saying, that the market has been bleeding all the way, bleeding. But for some reason, this is a clear picture of what market structure is. The market has been coming down, making a lower low, high, lower low, lower high, lower low. And once we got to this particular zone, the market could not break below here. It got here again, could not break. It got here again, could not break. That is a sign of reversal in the market. And what I did was, once I spotted this, I waited on the daily to see what it will happen. So in the market broke, you see the clear example of what I was saying then. The market broke above this particular neckline. It came back with this long wick to come and clear all the whole stop of the whole early buyers. And when I spotted this, I was satisfied because I know that stop loss run has been done. So what I'll be waiting for is to buy. So now I go into my 4 hours time frame, which is where I always take my trade. And on the 4 hours time frame, I kept watching for another, because this one has been done. I kept watching for this particular zone here to bridge, because this is a double bottom in a very trickish way. Double bottom in a very trickish way. Not all the whole double bottom will just be very perfect, like textbook drawing, something like this. Not all of them will just give you a perfect double bottom, something like this. This is a clear textbook way of a double bottom. They say when you spot this kind of pattern, you hopped in. But not all the time, all this kind of perfect textbook scenario will always happen. You need to be smart. You need to be sensitive in this game. So once I spot this particular double bottom here, I know that this is a double bottom in a trickish way. And once the neckline got broken, I told my guys in my Discord group that I will be going for long and my overall target will be here. I went in somewhere here, and when it pulled back again to retest, I hopped in for another position here, and I was moving with the market until we get here. I hopped in early this week until we get here, and I exited my trade, and this morning I re-enter again just for me to just follow up to this particular zone here. I hope you have gotten what the clear example of how to know market structure, how to trade using how to know market structure. If you find this video helpful, please give me a like and also subscribe to my channel. I'm just starting. Please, I beg you, give me a like and also subscribe to my channel. And if you don't like it, if there's anything you don't like in this video, also feel free to give me a dislike or tell me in the comment box below what to do to improve in my next video. As you all know, no one is island. We are all here to learn. I'm here to learn. You are here. You are also here to learn until we attain the level which I call the CPT, consistent, profitable trader. No man knows it all. We are all here to learn. Until then, I will see you in my next video. But please keep learning, keep practicing. You may not be able to get it right at the first. You may not be able to get it right, but the more you are learning, the more you're learning, the more you're getting it better. The more you're learning, the more you're getting it better. So until then, I will see you in my next video, which will be coming up on Saturday. Please subscribe to my channel. Please, I beg you, subscribe to my channel. Thank you, and God bless. Bye.